Good morning, everyone. My name is Miles Paschini, and I'm one of the founders of B21. And we're going to talk today about crypto asset investing. And I want to start out with how funny I thought it was that the organizer suggests that we talk about Warren Buffett and why or how he would invest in crypto, because we all know that Warren Buffett has publicly denounced crypto. And so we'll have a little bit of fun with that today. The first thing I want to talk about is what are crypto assets. A lot of people have a relatively narrow view of what they are, and so I just want to go through a quick kind of overview of what a crypto asset is today. And the point I want to make is that this is really evolving. It all started out as we found out about network tokens, Bitcoin being really the first one, and it was used as part of the consensus protocol to secure networks. Then we saw other stuff come along like Ethereum, EOS and Monero are reasonable examples, and because of Ethereum, we got introduced to utility tokens. So essentially, we had smart contracts, which were built on top of the network. And probably the biggest thing that we got out of utility tokens was the ICO, but these utility tokens were essentially as fuel to power networks. And so they allowed us to do things like develop applications, but I think the biggest application was the advent of the ICO. And then we started talking about, hey, can we tokenize assets? And so tokenization of assets could be real property, it could be art. There was a lot of ideas around how can we take a physical asset and somehow tokenize it. And then it evolved into, well, what about a security token? And I think this is kind of the necessity and evolution that came about. But we started talking about, does the security token represent an interest in something, a revenue share, potentially equity, and other types of stakes in an enterprise? And then we had non-fungible. So CryptoKitties is the most the most well-known non-fungible, but it could be collectibles, right? So think again of art, maybe a baseball card that's a unique issue, and we want to track that unique piece of issuance. And so the point I'm making when we talk about crypto asset investing is it is a market that's evolving. This is a picture of what it is today. Who knows what it's going to be in the future? I'll have something fun to share with you here is that this is a painting I bought several years ago. And I always ask people, what do you think that painting's worth? And I'd get everything from $5 to $500. This was painted by, I'll call it Bitcoin maximalist, and I loved it because of what it meant about Bitcoin. It was a Silk Road painting by somebody who was an original Bitcoiner. But this painting could be worth $1 billion. Why? This painting has a Bitcoin wallet address attached to it and a protected private key under the foil. And so I show this example to say that 3 years ago, this was an idea of tokenization of an asset. This painting, realistically, could be worth $1 billion in the future if we just dump some Bitcoin in there and wait a little bit of time. This was an early idea, but the point, again, is what we think is crypto assets today is likely to evolve. Here's another example. I was given this by Bobby Lee about 3 or 4 years ago, and it was 5,000 Satoshis. Has a wallet address and it has a private key hidden. Who knows what that piece of plastic is going to be worth in the future because it's been digitized. So these are just examples of what the future might bring for us. So the question is, why would people invest in crypto assets? I think the biggest reason why for most of us is you could participate in potentially transformative technology, and that's exciting to invest in the future of what technology could be. Also, crypto assets can represent fractional ownership in things that typically weren't available to investors. So imagine owning part of an iconic building, which would never be accessible to the average person. That's an interesting one. Historically, crypto asset investments were made available to everybody. That was the beauty of the ICO. But in places like the United States, that's changing, and in the spirit of October, we'll say boo to that. We really don't like that, but that's a reality of what's happening in the United States. Another appeal to crypto assets is a global market. It's borderless, right? So you can invest in teams and projects and technologies that are being developed all over the world, which typically early stage investors would only focus in their country or maybe even in their state. There's the potential for high return. That's exciting, like we all want that, but it comes with high risk and high volatility, and that's a reality of this marketplace today. A pro is liquidity, right? So if you're an angel investor and you invest in a startup, you're typically stuck in that deal for 3 to 10 years. With no liquidity, right? So you've made your investment, that's it. The appeal of crypto assets is I make my investment today. If it's listed on a secondary market, there's liquidity for that. So I can, whether it's up or down, I can get out of that investment. So that's an appeal. And I think just generally, it's new and it's exciting, right? We haven't seen an asset class like this come around for a very long time. So taking Mr. Buffett here, people say, well, do they perform well? What's the reality? Now, I could have taken so many different snapshots of this. I decided to go back 1 year, to be fair. In the last year, if you had invested in the S&P 500 $5,000 and you had invested in Bitcoin exactly 1 year ago, your S&P would be at 2,900, Bitcoin's at approximately 6,500. So what does that mean? A $5,000 investment in Bitcoin would be worth 7,900. The S&P would be worth 5,800. And so people ask me, well, should I invest just in stocks or indexes or whatever? The point is that these assets are performing interestingly well, even if you look at Bitcoin in this case, where the majority of the year is a bear market. So why won't our good buddy Warren invest in crypto assets? Number one, it's just simply too complicated today. The industry was built by technical people, so we have wallets, exchanges, private keys, all types of hurdles, including getting money in and out of the platform, which is quite difficult. Most of the general public is not geared toward being traders, and we're asking the general public to be traders in crypto assets today, and it's really not an environment they're comfortable with. Hard to secure your assets. It's difficult. If you want to own 20 crypto tokens, imagine your 20 private keys or your Trezor or your paper wallets, whatever combo you have. It's just not made for mass adoption yet. Lack of transparency or little or no regulated service providers is a big problem. And outside of the US, there's a huge trouble in getting in and out of crypto investments using fiat funds. So what needs to change? We need better user experiences. We need to remove technical barriers. We need more regulated service providers. We need better on-ramps and off-ramps to investments. We also need education and training. It's one of the biggest issues that exists in the market. And we need new products. What we're finding right now is institutions won't enter because the products don't exist. Consumers won't enter because there's way too much friction in the investment process. So good news, things are changing. Things are happening. There's apps like Abra, Revolut, Circle that are trying to address the consumer market, as well as B21, which is the company I represent. So we're trying to appeal to the mass market through creating products. Custodians are coming. You have Coinbase, BitGo, B21. We're trying to create an environment where people don't have to worry about their own security of their assets. And new products are coming to the market. We have ETNs, ETFs, and all kinds of different funds that are coming. So we have product diversification. Recently, hot topic is stablecoins. All they're trying to do is solve the friction between moving in between investments and moving in and out of investments. So that's a positive thing. And then we see regulations coming. So at B21, what are we doing? Number one, we're providing education. We've launched recently an app called B21 Life. I would suggest you go download it in the app stores. It's free. And all we're doing is trying to provide content to people that they can consume and learn. We have news, we have educational courses, and we have daily tidbits of information just to help people understand what's going on. And important, Warren Buffett quote says, risk comes from not knowing what you're doing. So very first thing is educate people about what crypto is all about. We're launching B21 Invest. B21 Invest is an application that allows people to create and manage their own portfolios. We focus on goal-based investing, so we ask people what their lifestyle goals are. You want to save for a house, how much money, what's your time horizon, etc. We're trying to encourage people to not be day traders, but to become investors. We're dealing with things like solving on-ramps and on-ramps, and we're just making it simple for people to get involved. The idea is that within a few clicks on a mobile app, you should be able to enter the market and exit the market without too much education. And these are just some views of what we're developing. So what's the summary? We have a very exciting and evolving asset class. Those of us who've been in the industry for the last couple of years, we went from Bitcoin to 2,000 coins or so, and we've seen things change from just having a network token to having a plethora of ICOs, and to where we are today, talking about security tokens and stable coins. So plan on that to continue to evolve. There's so many different assets to choose from today, and I can assure you that the assets that we're looking at in the future will evolve as well. I believe there's still high opportunity for gains, but anybody investing has to accept that those opportunities come with risk. And right now, I'd say the risks are high, but the returns are high. You don't, if you're going to put money in a CD, you're going to get a 1% return. But if you're going to go to Vegas and put it on black, you got a much better return, but a massive risk, right? We want to be somewhere in the middle of those games. And so the other positive thing is new tools are coming. They're being developed every day by my competitors and my colleagues in the industry, and I think that's a positive thing. Just in closing, it's a very exciting place. I think that companies need to continue to develop tools to make this more accessible to a broader market, whether those tools are institutional or consumer. B21 is doing our part to develop a custodial service directed at a consumer market. If you have any questions or interest, please grab me in the hall. Thank you for listening.